So today we made about $2,000 using only $2,000. So we basically doubled our money. Now, if we want to be exact, we'll go over and look at it on the monitor tab. You can see that it was $1,980 that we made today, but let's just be simple. Call it $2,000 for the sake of calculations. It'll make it real easy on us. It'll make it faster for us. And let's just jump right into it here. So as we mentioned, we made $2,000 today. We only used $2,000. So I basically put in 2,000, sold it for 4, and then we had a $2,000 profit from that, which I always like to use my used car example, which I'm going to refer back to later in the video here. You buy a used car for $2,000 thinking you can sell it for more. We basically bought the car for 2, sold it for 4, and we keep that $2,000 profit there. But obviously there's more that goes into it. So stick around and we'll just get into all the good stuff here. So first things first that I want to go over is on the chart. We're going to talk about what we were trading, which was ExxonMobil. It's an oil stock. And basically what I was doing was I was playing, in the most simplest term, if you want to look at it, we were playing the key levels and the ranges in the sense that I had been watching ExxonMobil and CVX for the last week or two. And mainly with this ExxonMobil, what I was doing is I was watching it for a dip around this 105 area, which as you can see, this arrow right here is where I first got into the trade. And even though it's where I first got into the trade, we're actually just going to call that my only or main entry because of the fact that if you take a look over here on the orders, you can see that we got into it at 637 and then we added in at 639. Now, the reason that there was a little gap there is because I was waiting for a little bit of confirmation. I just wanted to make sure it wasn't going to just drop out on us from there. So as I gave it a little bit more time, saw that it had a little more strength to them, that's where I added in to a full-size position of 20 contracts there. But we're just going to call it one order because of the fact that they're both right at the same price of 105, right around the same time. So there really isn't that much difference that goes into it. Although I did want to explain it just for the sake of explanation, trying to let you guys get inside of my mind a little bit so you can kind of see or think what it's like to think like me when I'm in the zone or in the moment. So that's basically what it happened is, so kind of we're gonna bounce around a little bit, if you will, on this, since I kind of already introduced it in the sense of saying all right, well, look, we put $2,000 in, we sold it for 4,000, and that's basically where we had the $2,000 profit. So we're not going to waste too much time on that right now. We'll come back at the end of the video for anyone that's new here and doesn't necessarily understand how these calculations work, or maybe they're new to options trading and all of that. We'll come back and go over all of that. But other than that, we're just going to bounce back and forth with the orders here so I can kind of walk you through the whole entire story. So as I mentioned, we got in it right at 637 and 639. So over here on the chart, as I mentioned, we're going to put it onto a 1-minute chart just to make it a little easier here to follow along with. And basically it was dropping, and that's what I was waiting for it for. I was waiting for it to kind of come down to this 105 area, and it dropped right through it. So that's why I was like, all right, well, let's see what happens. Ideally, I need it to get back above it if I'm going to want to get into it for the play that I had in mind. Otherwise, if it just keeps dropping, then that's it, let it go. So that's where I first got into the trade, is right when it popped back above the that 105 area there, as you can see here at the it was right at the 637, and then I gave it a little bit of time. It dropped below it again, dropped back above it. It kind of did the hokey pokey, you put your left foot in, you put your left foot out, all that good stuff. And that's basically where I doubled up into the position to be what I would like to call a full-size position. Now, every position is a little bit different just because of the fact that the premiums, the spreads, every stock is different, so everything has to be treated in a different way. For example, if I wanted to trade something like I don't know, let me think of like Netflix or Nvidia right now, and obviously depending on when you're watching this video, it's subjective, but right now Netflix and Nvidia, they're $400 stocks. If you wanted to get into an options trade on it, obviously you could go at different strikes, expirations to bring your costs down and all that. But if you want to be in it at a reasonable type of a trade, as I like to call it, with something that makes sense, you're going to be in it well over at least, let's just say 10 contracts on it would be at least $4,000. You want to be 20 contracts in it, that might be $8,000. So everything is different. It is subjective a little bit. So it depends on how you like to look at things and how you like to gauge things. I usually gauge things based on the stock price, and then I just use the options as a means of trading the stock instead of actual shares. I just trade the options. So hopefully that kind of puts a little more context in your mind too, so you can see how I'm looking at these things. But basically, I'm not trading them the way options are intended to be traded. That's kind of a little more risky. I'm not going to say it's not risky or one thing's not risky or one's more risky than the other, because at the end of the day, all types of trading, all types of investing, all types of day trading, swing trades, whatever it is risky. However, if, for lack of a better word, we're going to take it out of context, I know I don't say that one thing is more or less risky than another, but To put it in context, if you're trading options the way that they're intended to be traded, it's a little bit more risky than if you trade them the way that we trade them. And again, it's all subjective because it depends. How do you trade options? You know, everybody trades them differently, but the way they were intended to be traded is kind of like betting. You know, when they were first introduced to the markets back in the day, you know, it's not like people were, you know, really using them in a sense of like, oh, I'm going to get in it today and sell it today or sell it tomorrow. I'm not going to hold it till expiration. They were mainly intended for people to hold them to expiration. So that's just one thing that I want, like a little side note I wanted to put out there for you guys just to keep in the back of your mind as you like just either go through this video or any of my other videos or future videos or this, that, and the other, just so you can kind of understand how I operate. But again, as I was trying to say, is that every single type of trade is different. It is subjective, not just to the person, but to the type of trade, the stock that's being traded, how volatile that stock is, how the options work, and all of that. So the reason why I wanted to give that little side note is because I also don't want people to I'm not going to say that I don't want you guys trying to put things together and piece this together and piece that together. That's actually what I want you to do here. But I want to make sure you're piecing together the right types of things. So I don't want you to focus on, like my whole goal here isn't to try and trick you and make you think one thing when it's really another. You know, I want to try and I want to illuminate the path for you as much as possible. And I just don't want you picking up on one particular thing, thinking that's like a golden nugget or a golden like idea within trading, when really it's just subjective. So just to kind of reiterate, 20 contracts doesn't always mean full size. $2,000 in the trade doesn't always mean full size, but I did just want to put that out there for this trade, that it was what I would like to consider a full size position, 20 contracts. I was in it about $2,000. Now we're going to revert back to what I mentioned earlier in the video about my used car example. If you're buying a car for $2,000 thinking you can sell it for more, you're not always going to be right. Especially people that have actually done this in real life. You'll notice things happen, you know, things go wrong with cars. People make mistakes. You might have bought a car thinking that it was X, Y, and Z, but really you realized it wasn't. It was a lower model. So what happens? Are you going to just go and put the car on the side of the road and say, all right, well, I'm done with it and just somebody else can come take it or whatever? You can go send it to a junkyard? No. You're going to sell it for less, or you might put a little more money in, fix it up, whatever the situation is, and then sell it. But the point being is not everything where you buy it, using this used car example, you're not buying a car for $2,000 and if it doesn't work, well, throw it to the trash. No, you can always sell it for a loss, a small loss. And that's why I always like to say, have a plan so that when it goes against you, you're not just letting it free fall on you and your money's just like tumbling away. You have a plan. And same thing for the upside too. You have to have a plan of when to get out for a profit. Otherwise, it'll go up and it'll come right back down on you and you didn't even make a single thing out of it. So that's just the idea that I want to put out there real briefly. Now we're going to move back into the trade idea and kind of wrap that up here because I don't want to start rambling too much on you guys here. I don't want to make this like a 20-minute video, and I can already tell that I'm getting towards that 10-minute mark. So that's where I start to kind of like kick myself in gear and speed it up a little bit. So just to kind of summarize this idea for you guys here, we got into the trade right here, right at that 105 area. And basically I had my primary profit target on the 107. It did go above the 107 area, and I kind of started playing with it in a sense of like, all right, well, let me raise my stops. If it goes below this, then this, that, and the other. And I raised it a few times. Then it came to a point where I raised my stop to like the 107 area and it just dropped below it. And that's where I closed it out for a total all 20 contracts. I could have closed 10 and held the other 10 to see if we did get the 108, which is kind of like what it did towards the end of the day. Probably would have had to have held it overnight, which I mean, you know, I'm not going to try and say hindsight, you know, I know hindsight is 20/20, but I'm not going to say like I would have gotten it perfectly. I wouldn't have perfected it either. Sorry, I got a little tongue twisted there. Because that's role play. Even if I did hold 10 of the contracts, I probably would have sold them right before the end of the day. I would have talked myself into it, saying something like, well, you know what? We're right there. We might as well, this, that, and the other. You don't want to hold it overnight. You can revisit it tomorrow. So I look at it from a perspective, like even if it did go up more, it wouldn't have been that much more, but whether it would have been much more or not much more or a lot more, you just have to remember you respected your plan, and that's a win. Regardless of if it was a big win, a small win, or however you want to look at it. The point is, if it could have been more, you don't worry about that. The fact that you respected your plan should mean more to you than how much more you could have gotten in terms of a dollar amount, because you're building your discipline, and discipline's going to go a long way. I always like to say it's not like like a race, a sprint. It's a marathon, you know, you got a long way to go. You don't want to like exert yourself right at the beginning. So when I start giving examples like that, that's when I start rambling. So we're going to kind of start wrapping it up here. As I mentioned, got in at the 105. I sold all of them, all 20 contracts, right at the 107 area there. So basically, as the value of the stock went up, the value of our options went up. So basically, what we had paid 105 for turned into, let's just say 205 for the sake of the calculations. I had 20 contracts, and that's basically where you can see that it was $1,000 for each 10 that I had. I had 20, so that's the $2,000 profit that you can see there, or you can calculate it in a different way. We're going to do it my typical way, just for those people that are new here. When you see that it shows 105, it's actually 105. Because with options, 1 is equivalent to 100. So because I had, 10, let's just say 20 times 105 would have been 2,100. So to be exact, we put 2,100 in. That doesn't mean we're risking 2,100. You can always have a plan, sell it for a small loss. But we put 2,100 in. And then a few hours later, that 2,100 turned into, let's just say we sold it for 205, which would have been 4,100. So 2,100 in, 4,100 out, and that's basically where we got that $2,000 profit. Now, again, of course, it's 1,980 because of that $1 that we were short on this. Instead of it being 205, it was 204. 20 contracts, that's $20. I'm sure you guys can get the concept of the math there. But let's just wrap it up one more time on the charts real quickly, like speed through it here. So we got in right around that 638 area. We'll average it down, and we were out at 1108. So 638 basically as we bounced off of that, not bounced, we just kind of flushed through that 105 and got back above it. That's where I got into the trade. And then as it went up, right at this 107 area is where we took our profit on it, closed all of them out. And that's pretty much how we made $2,000 today, using only $2,000. So kind of like a cool trade there. We put $2,000 in and we made $2,000, and that's our $2,000 profit. So anyways, I just want to try and see if I'm forgetting anything. I think I mentioned it all. So that's pretty much it. We'll wrap it up here before I get too wild on it. Just make sure you guys hit the thumbs up, like the video, comment if you have any questions, email me if you have any questions, subscribe if you could be so kind. And that's pretty much it. Just have a great rest of your day or a great rest of your night. Just have a great rest of your life, and I'll talk to you soon.